Farhad Alavi. Farhad is the managing partner at Akrivis Law Group that focuses on international and domestic corporate matters and complex trade issues, including sanctions. A lot to discuss here. Farhad, the attacks set back immediate oil production, but the Saudis also have deals for future oil, including a $10 billion investment deal, we should note, in China to deliver crude oil. What do you think this does to those commitments and to assurances that Riyadh can offer?
Well, for one, there's the dampening of output because of these attacks that have happened over the weekend on the production facilities. Beyond that, there's the price issue as well. The markets typically don't respond well to any kind of skirmishes in the Persian Gulf, especially anything related to the oil industry. So naturally, these things will have some effect. And we also have this IPO for Aramco that is allegedly being pushed back. So none of these really bode well, I think, for international oil markets, as we can see in the price change that happened today.
Some investors, John, reporting there, seem surprised that the Aramco sites could be so easily hit, and the market in part responding to that vulnerability. Do you think this was a grave oversight in terms of security? And what does this do to its IPO, which, as you mentioned, is possibly pushed back?
Well, I mean, it does show the volatility of the oil markets, the way the oil markets have reacted to this. I mean, there was a thought that, once Iran was the U.S. pulled out of the JCPOA, that Iranian oil was subject to secondary sanctions that would put a large quantity of oil outside of the international markets because it would no longer be purchased. And that's happened. And the market responded fairly, tepidly, I think, to that. Oil prices didn't shoot up. This is a different ballgame altogether. And I think, the thought that this was impervious to any kind of attack or any kind of disruption, at least you could say, has had an effect. It was not expected. Between all this, it does create an economic challenge. It does jack up the price of oil. So at the same time, oil-producing countries benefit in a way from this. But it is a shock to the system. And I think the fact that the price has not gone up so high in decades, as it has today, speaks to that.
Donald Trump, the U.S. president, said he might release some U.S. reserves to offset the cut in production. Do you think that's wise?
I think the president is very keen to make sure that any disruption of the oil market would not have any kind of reverberations in international oil markets, which could impact the U.S. economy as well. We're in a very volatile time, arguably, right now, and I think the president is taking great care to make sure that nothing would destabilize our economy or do anything that would impact our economy in that way, especially given the election season that's coming up.
The U.S. and Saudi Arabia are blaming Iran, even though the Houthis have taken responsibility in Yemen. They've taken credit for it. Washington says it has satellite imagery to show that these drone strikes did not come from Yemen. What does Washington do with those?
The jury's out on that in terms of, was this from Yemen, was this from Iran? I mean, the argument I think that Washington is putting forward is that this was too advanced an attack to come from Yemen. It's most certainly, given the geographic proximity, the military sophistication, more than likely from Iran. However, there's not been any kind of clear information, at least provided to the public yet, about this. Either way, I think the broader issue here is that, as I said earlier, the market does not respond very favorably to these skirmishes, whomever they might originate from. So it's a very delicate time in that part of the world and in energy markets, naturally.
We had a Gulf expert on yesterday saying that even if this is not Iran, even if this is the Houthis, they are using drones designed by Iran and building them in Yemen. So either way, there is an implication, he says, for Iran. Do you think this is part of a maximum pressure campaign by Iran to get sanctions lifted, and will it work?
If indeed it is shown that this is traced back to Iran, I think this is very typical of the Islamic Republic's behavior in these types of spheres, given that it's under this economic vice because of secondary sanctions, because it's no longer able to sell much oil at all, if any, at this point. It has resorted to these asymmetric type measures like seizing tankers and whatnot. So this would be, if proven, consistent with that. I think that is what the government perceives as its leverage point, especially as it is increasingly marginalized from the global economy. So that's how it can affect things.
And much of the global economy has already been rather sluggish. What do you think will be the consequences of sustained increased oil prices?
Oil prices can have a very strong correlation with economic performance internationally. And they can boost things and they can slow things down. I think oil going up, high oil prices had been forsaken a while back, and I think this shows the relevance of oil and the fact that markets will continue to be impacted by oil in the foreseeable future.
Farhad Alavi, thank you so much for your insight.